Wealthies, welcome back. If you're new here, this is All the Wealth, our Wealth More Wealth Building channel. I'm Mical Jeanlys-White, the founder and CEO, and with me today is Matt, our portfolio strategist, investment lead. And today we're going to unpack what happened in April and give you guys some of the market insights, the things we're seeing, and some tips on how to move forward. So let's get at it. So Matt, April's been quite the month. Tell us a bit of what you saw.
Yeah, I mean that's understatement of the year so far. If you were following along week to week, you probably had quite a bit of anxiety during the month. I know I definitely did, and almost every investor would have for sure. The month started off with the Liberation Day tariff announcements from President Trump, and the expectations were a little bit blindsided, I would say, as a
Yeah.
understatement, and the markets really were volatile for that first couple weeks. I mean, we saw the most major markets enter bear markets, and the news and the headlines are just hitting you every day with something else. So it was a time to hold on to your stomach and try and get through it, basically.
Yeah. I do want to congratulate our retail investors. In our last chat, Tanya and I were sort of unpacking student loans and talking about, the markets. And my wish was that retail investors for once would not panic sell. And the data's
Yeah.
in, and kudos to our retail investors. You guys did not panic sell. You stayed the course. And it is actually the institutional investors that drove most of the sell off. So, if any of our chats over the last month here inspired you to take a deep breath, think about your long term strategy, if it inspired you to join us for a one on one, email us with a question, and that helped you to not sort of panic sell, I can't tell you enough. I have all the love for that. Like, please, guys, keep tuning in. This is why we're here to help you guys stay informed and to not fall into these known traps of retail investors buying high, selling low, panic selling. And so, since my first wish came through, I'm going to put another wish out there that some of you, the younger investor that had the opportunity to enter at the lows, that maybe some of you guys also did that and came in as the market dipped.
Yeah, just to echo that sentiment, I've been investing in the markets in quite a long time now. I've studied it throughout my whole career, and it's often the worst thing you can do is to read the headlines during those negative weeks. The market generally climbs slowly over months or years, or what you should be looking at is more, multi-year timeframes. But when the market pulls back in a risky event like we had with the tariff announcement, it moves very sharply. It moves very quickly. You almost don't have a chance to catch your breath and figure out what's happening, because traders tend to sell first and ask questions later. That's probably what we saw a lot on the institutional side. But as a retail investor, you got to make sure you're thinking about your long-term goals and what you're trying to accomplish. And selling out during a panic like that is it's one of the worst things you can do, and it really affects your long-term returns. And we saw it this month as like a small microcosm. It's actually recovered almost to where the market was right before the tariff announcement. Um, it's climbed. The S&P's climbed about 17% off its low since that April 2nd date. So, if you close your eyes at the end of March and you open them at the beginning of May, you'd be in the exact same spot. You might not have even noticed anything happened. So it's really a testament to staying invested and sticking with your financial goals and your objectives, and not the short-term noise really isn't something to be paying attention to, too much.
Wealthies, I ran into a technical glitch. I'm handing it over to Matt to wrap up our market update. Keep listening.
Hi, everyone. I just wanted to give a quick update on kind of where the markets have been the last little while, basically through April, starting through March, and where we kind of go from here. Obviously, April was a bit of bit of a wild ride. You had to kind of hold on to your stomach a little bit. It all started with the Liberation Day tariff announcements on April 2nd. We saw the market pull back quite drastically. Most major markets actually entered what's called a bear market, which means they dropped um, 20% or more from their peak. But it's been a little bit interesting since then. So before we get into it too much, I know we like to congratulate everyone who's kind of stuck with it and listen to the guidance that we've been trying to give and say stay invested for the long run because that's really the most important thing you can do. When you're investing, you're not investing for a few weeks or a few months or even a year. You need to be investing for kind of the long term, the 5, 10, 15 years out, depending on your objectives. A lot of clients can lose sight of that a little bit when the short-term news comes out like this because it's so in your face. It's so every day. The world is collapsing. The economy is gonna go to zero and everything's gonna, that's just not the reality of the situation. And after we saw the markets fall so sharply after the tariff announcements, what we saw was quite a remarkable recovery, actually. The U.S. administration softened their stance on tariffs a little bit with a 90-day pause for most trading partners. And we actually saw the markets rally to almost the exact same point where they were the day before the announcement by the end of April. So, I've seen this a lot in my history of investing, as well as if you look back in history, it's quite common to see after some sharp declines, you see some very sharp rallies. Um, one thing I like to bring up is that the market tends to gradually go higher over many months, many years. But that doesn't mean in a straight line, as well as when the market sells off on a risk off event like we've seen, it happens quite quickly. So, it's normal for the markets. We've seen it many times in history. Pullbacks, while uncomfortable, are actually it's quite a normal thing to have happen. So stick with it and make sure that you are more goals-based planning with your investments and not trying to pick the best stocks or the things like that. It doesn't work out long term. Um, what you need to do is stick with your strategy. That's really what works out in the long run. Um, what we've seen in the last few weeks is despite these tariffs coming into place, we've actually seen some corporate earnings that have been quite good, especially out of the tech side. So the NASDAQ index, which is more technology heavy, actually was up in the month of April. So despite everything you've been reading, despite everything you've seen, tech stocks actually did quite well last month. Another thing that was not as much important to the markets, but kind of a more emotional side is Warren Buffett had his annual investor meeting. And if you don't know who Warren Buffett is, he's one of the most legendary investors of all time, concentrating on value investing. So buying things that he sees are undervalued over the long run. And he's actually retiring this year, which is a sad state for many, many people who have idolized him over many decades. But for him, someone asked him during his investor meeting what he thought of the recent turbulence in the market, and he sort of brushed it off and said, it's just normal. That's just, the way markets are. And it really is true. We need to take a step back sometimes and sometimes turn off the screen and turn off the news and just let things play out as they may be. The economic news that came out in the US, there was a drawdown in economic activity for I think it was negative 0.3%, something like that. You know, it the expectations are right now are if tariff stays in place, there is a possible technical recession. And what I mean by that is two negative quarters, so 6 months of negative GDP growth. Without getting into kind of the technical parts of that, what that What that means is 6 months of bad economic growth based on what's happening in the US. Now, if that's going to be what the expectations are, is that that's going to be a mild recession, if anything. We're going to see the -0.3 and -0.5, something like that for the 2 quarters. That I don't think is a huge issue because a lot of the drawdowns are actually self-inflicted. So if we reverse these tariffs, then, does growth come back? Probably. If the growth is too negative, we'll see the Federal Reserve come and lower interest rates, which should boost the economy. So what we're expecting is something along those lines, and whether or not that affects the stock market on the headline news, that we'll have to wait and see. But in all, I just want to kind of highlight what everyone at Wealthmar has been saying is just when things get tough, that's kind of where you kind of look to us for guidance, and we're happy to provide it. And I think you guys have done a great job kind of sticking with your investments, and you're doing the right thing for sure. We've seen many periods like this before in the past, and we will continue to see them. If you're telling me where the market's going to be in 6 or 12 months, I have no idea. No one does. If you did, then we wouldn't be working in the business, right? We'd be off on a beach somewhere enjoying, a nice drink with a little umbrella inside of it. But the reality is, do we know where the market's going to be or 5, 10, or 20 years from now? The history says that we're probably going to be able to the US is going to be able to make some good profits, and eventually those stocks do grind higher. So just stick with it. We'll provide updates as we see. We're getting even more news on trade today. Like there was a trade deal with the UK announced this morning, as well as some more news coming from other trade partners. So we're just going to wait and see. And we'll give updates as they come in. Thanks so much. Talk to you guys soon.
Wealthies, thanks for tuning in. Thanks for staying the course in uncertain markets. As a reminder, you can join our Wealthmore community for free. You can invest and work 1.1 with our wealth advisors. Our Invest Plus plan is just $25 per month. Download the Wealthmore app today. Until next time, all the wealth.